Ladies and gentlemen, good morning. A very warm welcome to Eden Park, to the Navigating Regulation Advice Summit. To the folks who are still streaming in, there's heaps and heaps of seats, so make yourself comfortable. Fantastic to see so many people here. When we launched the event at the end of last year, on day one, like 300 odd people just rolled in. And the registrations have just kept on going, and to see the room this morning empty and now full is pretty awesome. And I guess what it says to me is there's a thirst in this community to come together, there's a thirst in this community to learn, and there's a thirst in this community to navigate into the future, and I think that's a very powerful thing. And the fact that so many people have turned up is a great signal of people's interest. It is a joint production, so on the slides you will see a bunch of logos, and we're joined by some Aussie colleagues. You know, in a room in one place, the regulator and the ministry and the Financial Advisor Association and the representatives of the manufacturers are all in this together, hosting it together, and that hopefully is a very powerful signal in its own right to everyone. So in that regards, absolutely welcome. Run of the day. So we're going to do this in two halves. First half is it's appropriate we're at Eden Park, so we are going to have a first half. First half we're going to have a discussion with Minister Farfoy. We were in Wellington yesterday, and he was fantastic. He came along. We were happy to ask him a whole bunch of questions. We got some highlights of that. He's obviously not here in person because the House is sitting. We're then going to have the spotlight sessions with the five spotlighters. This is the industry's approach to the TED Talks. They'll be short, they'll be sharp, they'll be on point. And there's even a timer down here today, so it'll be pretty pacey. What we'll then do is we'll break for morning tea in the expo. For those who really like their coffee, thank you, Astron. There are 2 coffee stands there and there. And then we're going to be back in for a panel discussion. Panel yesterday was really interesting, very engaged. It's going to be your opportunity to ask questions. It'll be a big room. We'll figure out how we do that, but it was a big room yesterday, so we'll make that work. And away we go. And I just wanted to just thank our people in the marketplace. It is the first time we're doing this marketplace, so it's relevant because all of the businesses in the marketplace have got products and services and IP and so on to help you and us transition into the new regime. So thank you to those organisations who are in the marketplace. So let's kick off. Absolute pleasure to invite to the stage Rob Flanagan, who is the chair of the Financial Services Council Board. I've worked immensely closely with Rob for the last 2 years. He has guided this industry and this association from a pain point that we were in a couple of years ago to a place where we're able to do the sort of things that we're doing. So please welcome Rob Flanagan.
Thanks, Richard. And on behalf of the FSC board, welcome here today. I can recall last century when a large company first introduced the $1 million contracts, the golden handcuffs. And if you sold their products at sufficient levels, you got $1 million. And that certainly focused one's mind. And of course, immediately all other companies joined the bandwagon, and we started the incentive battles. When you look back now to that time, it may have been the right thing at that time, but it was pretty naive thinking for a sustainable industry. Over the past 24 months, the sector both in New Zealand and Australia have been under really close scrutiny. A lot of regulation has been talked about, being developed, and a huge focus on conduct, culture and governance. I think although all of us in this room would argue we've always looked after our customers, it was just a natural thing that we did. But lately we've been challenged to show me, those magic words, show me. Show me, how do you know that you've put the customer or the customer's outcomes first? And quite frankly, we've been found wanting. For it's not just showing, it is also the perception that we create in our processes and in the way in which we signal to the market on remuneration, etc., etc. So this is a sort of a big paradigm shift for a lot of us. And some of us are finding it quite difficult. So we have a couple of choices. We either lead and respond, or we wait to be led. And then we can blame the regulators or blame everybody else. And that's sort of high-risk strategy to some extent. The FSC's view is that we need to respond to the challenges that are being put up. We need to partner with the government and the regulators. We need to own our future. And so we need to own our future. All of our objectives is to have an industry that is growing and that is sustainable. We are an important part of the economic stability of the population of New Zealand in so many different ways. Regulators do not know the industry. They have no depth of knowledge as we do. We need to own our future and be part of the solution and control our destiny. The only way we will be successful is by doing it together, and everyone in this room has a part to play. From our discussions with the Minister and regulators, we have nothing but support. They want to come and be part of the solution with us, not impose on us. It is clear the industry has not moved with the times. We have fallen behind customer expectations. We must move forward faster and challenge the status quo and challenge ourselves to reach a higher level of professionalism, thus gaining the confidence of the customers and the wider market. Today is an opportunity to learn, listen and ask questions and to be part of the solutions for the future. So thanks very much for being here today. I wish you a very productive day, and please participate, because the more you participate, the more all of us will learn and be more knowledgeable of the issues. Thank you very much.
Yesterday's session we ran in Wellington, and previously on the 29th of January we had the Conduct and Culture Report into life insurers released. It was a pretty intense, probably 48 to 72 hours. And one of the things we said at the FSC board is we actually need to spend some time with the Minister and understand what's in the May consultation. So we had a meeting in his office a couple of weeks back, really good discussion. And at the end of that discussion, he asked an awesome question, which was, how's the sector feeling right now? And the answer to that was a degree of anxiety. This wave of change that's come and coming through clearly for everyone in the value chain puts stress on the system, a lot of uncertainty about where we're heading, and of course that can lead to anxiety. And the best panacea for that is to actually get some clarity. And so he turned up yesterday to help with that clarity piece. And like I say, we've filmed some of it, so we're going to play it in two parts. Firstly, the set piece, and then secondly, just the highlights of the Q&A.
As I've said from the outset since I became Minister, good quality financial advice is essential, never more so than today. And according to the Commission for Financial Capability, 68% of New Zealanders have money worries. Many are overwhelmed by the sheer volume of financial choices they need to make. The complexities and understanding financial language is often a barrier for Kiwis making good decisions. As the Minister of Commerce and Consumer Affairs, it is my priority that New Zealanders can make wise, motivated and informed financial decisions. And of course, financial advisors play an important role in helping Kiwis towards better wealth management, understanding financial risk and opportunity, and ultimately encourage confidence in financial decision making. From a legislative perspective, the government wants to ensure consumers are able to access good quality financial advice, and the Financial Services Legislation Amendment Bill, or FSLAB as we call it, significantly reforms the way that financial advice is regulated. One of the key elements of the FSLAB bill is that it holds all advice to the same core standards like complying with a code of conduct, so that all consumers can be confident about the advice that they're getting. A lot of the feedback that I've heard is that consistency in the way that advisors are held to account is essential to build trust in the sector. I do appreciate, as Richard mentioned, that these changes may be somewhat unsettling for the industry, as change of the status quo poses challenges as well as opportunities. But I would like to assure you all that we've taken a measured and balanced approach to ensure that the new regime is workable. I have been clear that the bill must strike a balance between ensuring consumers can get access to quality advice while not imposing any undue compliance costs on the industry. And I have been paying attention to the impact on smaller business advice in particular, because they are a very important part of the industry, and I want to make sure that the new regime will work for them. The passing and implementing of the new financial advice regulatory regime in the bill is a priority, and we are making good progress. The bill is in its final stages at Parliament, and we are hopeful that those stages can be completed in the coming weeks, and I'm not expecting any substantial changes to the bill within that time. The Code Working Group has provided me with a draft Code of Conduct at the end of February, and we're also progressing various regulations. And I want to thank Angus and the members of the Code Working Group for their work developing the draft code and for their professionalism in their work. I know many of you are anxious to see what will be in the code, but there is a process that we need to go through first, including seeking comments from the FMA and advice from officials. And I've asked for those things to happen as quickly as possible so that you can see what is in the code sooner rather than later, and that you can start preparing for that new environment. I also want to thank those of you who have had input and have provided so far in the development of the new regime. I know there has been lots of consultation, and I sat in on some of it, and there is still more to come. It is important that we get all the details right, so thank you to those of you who have taken your time to provide some feedback. I understand officials will give you more information about some of the details, such as disclosure requirements, when Sharon Corbett from MBIE is part of the panel later this morning. Change is happening, and change is difficult, but the change will greatly improve access to high quality financial advice for all New Zealanders, and I hope that being here today will help you all prepare for that new environment. This new environment will be important for helping address some of the issues identified by the FMA and Reserve Bank reports on conduct and culture in financial institutions, and for heading off the types of issues that have been identified in Australia through the Royal Commission process there. However, the FMA and Reserve Bank reports have raised some serious concerns which the government is and will be addressing. While the FSLAB is in strengthening regulation of financial advice, there is a gap in regulation of entities like banks and insurers, from how they design their products to how they treat their customers at claims handling time. Ensuring that the banks and insurers are treating customers fairly is another priority for the government, and we will be consulting on options for greater oversight in this area. Part of this is looking at the incentives, and I've been clear we'll be closely scrutinising internal sales incentives, so things like bonuses and sales targets for frontline staff, and we'll take a hard line on soft commissions. I've heard from some of you that you're concerned about what this means for commissions, and when we consult in May, we'll be asking about commission structures and how we can ensure that the way commissions are paid is aligned with good customer outcomes. We want to make sure we find workable solutions for the sector that keep those good customer outcomes top of mind, but also ensure that consumers can still access financial advice. Finally, can I thank you again for your engagement so far on these reforms and for the work that you're doing every day helping New Zealanders make those wise financial decisions that we want them to make. Also, of course, thank you to the FSC for organising these summits. I think in a time when there is change on the horizon for your sector, making sure that we can engage and answer some of the questions and hopefully allay some of the concerns that you have along the way is extremely important for the government.
Look, thanks for that overview. Obviously, there's so many different streams and strands. If I can perhaps start with the consultation that's coming through in May, which you've alluded to and came out on the 29th of Jan in response to the Culture and Conduct Report. Are you able to tease out a little further what you see the consultation looking like, the areas specifically that you think that you want to look further at?
Look, a lot of the concern on issues I think we've certainly heard is because we've sent a pretty strong message around soft commissions, concern from specific parts of the financial advice sector about what the future of commissions is. We're not throwing the baby out with the bathwater, but we certainly do want to hear specific concerns, if there are some in the sector, about how commission structures work and why that is important for your sector. Because obviously getting paid is crucial to the sector, but we are concerned about some of the egregious behaviour that we've seen around soft commissions. I understand that may cause some unease, but I just want to give some assurance that we'll have a good look at how all the commission systems work, and we're not out to wreck that system. But we are wanting to have a good look at it and making sure that the good customer outcomes that we want are ensured by the systems that will endure over that time.
Yeah, you spoke in the media release and just earlier around some of the regulatory gaps around supervision and so on. How do you see that playing out perhaps in the consultation process?
Look, it's difficult because it's all new territory. We've never regulated for conduct and culture of financial institutions. But certainly both FMA and the Reserve Bank found some instances where the behaviour, certainly in the insurance sector, was below par. So that's why I think we've made some pretty clear messages about the likes of soft commissions and the perverse incentives that we've seen there by them being in place. But then I think in and around the margins, again, around other commission structures, we need to make sure we have, I think, what I would call a mature conversation about that and making sure, again, we get the balance right. Again, I think, there are a lot of things happening in the sector at the moment. We've got the SLAB bill, we've got the review of the insurance sector, we've got the aftermath of the FMA and Reserve Bank process. So I can understand that there could be some anxiousness, there is some anxiousness there. But can I just also allay any anxiousness by making sure that along the process, and I hope that you've seen that by the way that we've dealt with the sector between coming into government and now, that making sure we take a balanced approach is the way that we'll continue to consult.
So just heading to the Royal Commission findings, of which I think there were 76 or so, how important was the Royal Commission process in shaping the response that we had here, both in terms of the way the conduct and culture review took place, but then also some of the drivers of change?
Look, I'd say influential, but not necessarily a major driver of what you will see here in New Zealand. I'm thankful that the kind of egregious behaviour that we saw in Australia wasn't borne out in a large way here in New Zealand, which I'd like to, obviously acknowledge the sector for. But that doesn't mean that there aren't things that we need to address, and the FMA and the Reserve Bank obviously pointed that out, that there are some things that need to be addressed now so we don't have the ability for things to get out of hand in the future. They are different cultures, and I can't quite put my finger on why Australia is so different to New Zealand. Some of it might be the size of the market. But I think making sure we make those changes and consult along the way, as we've said, I think will hopefully put consumers in a much better spot, but also obviously give the certainty to the sector about which direction we're heading in. There's some extreme stuff that has been floating around for a long time, which we've made some strong statements about. But everything else, I guess it would be of interest to this room. Again, we are making sure that we're consulting and we'll deal with it in a balanced way.
So just picking up that sense of what can and should the industry do. There's this notion when there's regulatory and legislative change that the government and the regulator does stuff and then the industry's got to respond. There's a consistent message of actually the industry can start to do a lot of its stuff itself.
Yep.
Well, what does that look like for you?
Well, a lot of what the FSC is already doing, actually. I think one of the main themes that came out of both the banking and the insurance inquiries by the FMA and the Reserve Bank is the sector itself taking greater oversight over the way it deals with customers. I think we saw more scrutiny of that in the insurance report, but I think with both the Reserve, with the Royal Commission across the Tasman and the reviews that happened here at the end of last year, in the middle of last year, the finance sector itself and some entities within it saw the writing on the wall and started moving proactively. So I'm heartened by that. But unfortunately, as is in life sometimes, those who are on the extreme can ruin it for others and mean that you have to have a good look at the regulations within the sector. Again, I think taking a balanced approach to that is my overall message to this audience, because I think there is so much going on at one time that being extreme in the way that you deal with things is not the way you want to deal, is not the way that we want to operate.
Yeah, it's interesting that notion of, as you correctly point out, the sector on the insurance front has now signalled the end of the offshore trips based on sales volumes and so on. And the FSC introduced the code, and clearly there's the code of conduct coming in for advisors. So this culture and conduct and giving meaning to it. And I guess the message from us, and we'll tease it out over the day, is what can and should the sector be doing to, in a sense, own its own future, rather than just wait for reg change that might drive certain activities or certain business models or whatever.
Yeah, and I just like to reinforce the message that I have given sometimes at the roundtables that the FSC has held around the country, and that is that there is mutual benefit to consumers, the sector and the government to ensure that people are getting sound financial advice. There's some issues in the insurance sector at the moment that we're working through, but we want to make sure that every New Zealander is insured for whatever may crop up in their lives or whatever Mother Nature may throw our way. Because if we've got a massively underinsured country, then that has implications for the government. Also, there's business opportunity for the sector, but as I pointed out in the opening remarks of my speech, 68% of New Zealanders do have money concerns. And preparing for whether it's preparing for retirement, saving for personal use, or making sure you get good advice about a mortgage, we can't have that level of anxiety within the market. And a lot of people in this room are the people that will ease that anxiety. I think, and I made the comment within the speech as well, making sure that we look after small advice firms along this journey as well is extremely important to us, because we know that, especially in a lot of regional areas, a large number of small firms are actually making sure that people in those areas get the financial advice. So that was why it was useful, I think, during the code process that we were able to touch base with some firms both in, I think it was Hawke's Bay and Auckland, to make sure we got a gauge of where people were sitting.
Yeah, and that's really heartening, because in this room there are people who've driven several hours to be here from the regions, and they deliver services in the regions, and pretty key. Sorry.
Yeah, and one of the key concerns that we've had all along the way with the FSLAB journey is that if you make it too onerous, then I think with the profile of the industry, you may see some people exit the sector altogether. And we're not out to reduce the amount of advice that is out there in the sector, but we are certainly wanting to make sure that we work with the sector to lift the quality of the advice that consumers are getting, and also I think make it a much, hopefully, simpler process for consumers as well, so they can better understand and access the advice that they really need.
Yeah, that question around insurance is kind of important. It feels like the FSC does lots of data. All our data tells us we're in a flat marketplace. Hasn't really been growing significantly, other than age-based increases and so on. Do you have a sense? Do you have any kind of insight? Why do most New Zealanders wander around either blissfully unaware or just self-insured, to just take on the risk and say, I can manage the risk if something happens?
Oh, look, I think certainly some anxiety about entering into the process. I know that, and I think I've said this before at FSC forums, when I recently had to renew some life insurance, I felt like I was negotiating a free trade agreement. It was difficult, and I'm the Minister of Commerce. I'm not a Rhodes Scholar, but I think I should understand these things. But I found that if the process is too onerous for the individual, then I think they'll simply just walk away. And I think trying to make things much more plain English, and I know that is difficult, especially with some of the regulation that government can put upon the sector, is the way that we want to head. So then people are making the wise, motivated, informed decisions that we hope that they are making. And hopefully by making some of the disclosure statements much more plain English and upfront and along the way, that consumers will feel a lot more comfortable about the process.
Yeah. Can we just turn quickly to KiwiSaver, because the default review has kicked off, and there was obviously the KiwiSaver bill that turned up at the end of 2017-18. It feels like KiwiSaver's in many ways the bridge into a financial conversation with all New Zealanders because most Kiwis have got KiwiSaver. What's your sense, or what's your vision, if you like, long term for what KiwiSaver can do in terms of helping the literacy issue and the planning issue and the advice issue?
Yeah, look, I think trying to engage well, there are two issues. We want to get, obviously, there is a tail of New Zealanders who are just not engaged with KiwiSaver at all. There's also a rather large number of people who are enrolled in KiwiSaver who aren't contributing anymore, and hopefully some of the stuff that's going through a bill at the moment in the House will deal with that. But I think, and this will come out through the default review, looking at options that might force some more kind of granular conversations between consumers and their KiwiSaver provider about their long-term KiwiSaver balances, I think is useful. There's a debate about the moment about, do we have a default setting where if you are young and you come into KiwiSaver, then you automatically go onto a riskier setting. Because there's obviously you've got a lot more runway, and those are the kinds of conversations I think we need to have, because it's certainly from our experience set and forget, or it's you get into it and you're into it if you're young for the purpose of a first home deposit, which is a great feature of the system, but also there's a reminder that KiwiSaver is still fundamentally a retirement savings scheme. So I think that's just one of the things that will come, discussions that I think will come up during the review, that I hope will get more Kiwis engaged in actually in managing their KiwiSaver, because at the moment it's just set and forget.
Yeah. Last couple of questions. You've obviously got a very wide portfolio. You've been kept very busy with lots of different things. How do you manage all of these competing priorities as they turn up, whether they fires or civic defence activities, along with your other portfolio responsibilities?
Great staff and a great partner. Look, it is difficult to manage, but I'm not joking. Truly having a wonderful team behind me makes sure that you can manage the competing needs, and sometimes we can't control what's happening in a natural sense. And I think I've said this at FSC, it's a wonderful honour and privilege to be able to do some of these things. Again, the message is we want to make sure we get the balance right here, but it's, I didn't come here to eat my lunch. I think, if there are challenges that are there to do and get through, then you just kind of systematically work through it and make sure you hopefully get the balance right.
Fantastic. Minister, thank you so much. Really appreciate your openness and your candid conversation. Hopefully, folks, you get a sense that this is a minister who's committed. He wants the outcome. He wants us on that journey, and I think we should take great heart from your presence today and your comments today. So please join me in thanking the minister.
Thank you.
But I do want to acknowledge, we are very lucky to have a minister as interested and engaged as we do in Minister Farfoy. He turns up to our briefings, he accepts our invitation, he asks the right questions, and to Rob's earlier point, I think we definitely do have a partner in the Beehive who gets this sector and has a serious commitment, not only personally, as you heard, with his own affairs, but a serious commitment to make change for the good of New Zealanders in particular, but the sector has a lot at stake in that regard as well. So let's just head into a very small spotlight, and this is, if you like, a bit of a scene set into the broader conversation. And for any Stephen Hawking fans, thank you. We've borrowed a little from his topic. What you see here is the sector in profile. It's not all the sector in profile, but on the top left-hand side, you can see the data that the sector, as a sector, contributes significantly to the New Zealand economy. That's the broader financial services sector, not only today but over the past. And in the research paper that you can find at the FSC Stand Towards Prosperity, we together with NZIER went into the data to try and get a profile of the sector and to demonstrate the size and the scale, the diversity, the professionalism and so on, because we need to shift the debate from how do we move, culture and conduct is a hygiene piece. The conversation once we address that is how do we actually build a better and more sustainable sector? How do we partner more effectively with New Zealand's businesses and so on to actually turbocharge the sector and therefore the wealth and the health and the well-being of all New Zealanders. So that's the start of that conversation. On the right-hand side, you can see some of the insurance data. $1.2 billion of claims were paid out last year. Stuff happens in New Zealand. This sector has a really important part to play. But it's a sector that's not growing, so our insurance data is flat. Our insurance numbers are flat. We've got to figure out how we fix that. In the KiwiSaver space, it is the engine room of growth. This is now a $50 billion plus sector, and it is growing significantly. And some of the changes that have just been accepted and adopted around contribution rates and contribution levels, the conversation around where do you put your default money, etc., is alive and well. And you only have to look across the ditch to see the size and scale of that sector and how it's changing the way boards run and governments run and so on, to see where this may head. And that's a really powerful place to be as more and more money goes into KiwiSaver. And then, of course, you've got the profile of the advice community. And that's really important because the gateway still for many and most New Zealanders is to get good quality professional financial advice. And of course, that's partly the discussion for today. But you know, let's go back in history a moment.
The worst day on Wall Street since the crash of 1987.
The Dow traders are standing there watching in amazement, and I don't blame them.
We're now down 43%.
Almost everything there completely wiped out. And the NASDAQ, everything and more has been completely wiped out.
Let's talk about the speed with which we are watching this market deteriorate.
Can I get you to speak a little to Aaron?
Yeah, 1 billion, 2 billion, 3 billion. You can imagine the American economy is an economic train moving down a track that has no ending. And it picks up cargo and passengers as we go along. There's 330 million of us now, and there were only 4 million in 1790. And our farms are incredibly more productive, and we have 75 million houses, and we had a few huts then, and we have great universities and all of these things. So we're just constantly moving more and more cargo and passengers along. And occasionally that train is going to get derailed. In 2008, you had something close to a bubble in home real estate. 50 million people had mortgages roughly at that time out of 75 million homeowners. When that bubble burst, it hit home to probably 40% of the households in the country, these people that had mortgages on their houses. And fear spread in the month of September 2008 at a rate that was like a tsunami.
So if we want to understand where the seeds of reg change have come from in 2019, we have to go back to 2008. And for those of us who are around the sector in whatever part of the world, it spread like wildfire. And of course, the entire global system was on the brink of complete disaster until the Fed and money printing stepped in and so on. So I think the accountability we've got to have is to learn from history and make sure it doesn't happen again, but understand as well that a lot of the regulatory levers and the change levers are about making sure that those kind of things don't happen again. And that's why conduct and culture is such an important debate, because if you focus on your customer as the first and only, the shareholder will benefit. If you get those things the wrong way around, as we've seen time and time again, you can get yourself into serious strife. Now, over the last 3 to 4 years, this message has been coming through loud and clear. Maybe we always haven't listened as clearly as we may have. Maybe there was a message we didn't totally want to hear all the time, but the message has been coming through the thematic reports and so on. It was really only in 2018 with the start of the Royal Commission where that really accelerated, and I think everyone's ears were very attuned as stuff started to come out from across the ditch. And so the swift action of the FMA and the RB and the government was entirely appropriate, and all the commentary, which I won't go into, was entirely appropriate to make sure that New Zealand was in a sound position and that the sector took accountability for sorting stuff in its own backyard. And I guess that's where all of us are today. Members of the FSC, financial advice community, suppliers and service providers, we're all in the same boat because we're all responding now to the thematic reviews, the Culture and Conduct Report, the Australian Royal Commission piece, and looking to see what does the blueprint for the future actually look like. And I think ultimately that's got to be the opportunity. This is basically trying to convey that we're all in the same boat. The only way this is going to be successful, to Rob's earlier point, is if we collaborate together. So this is not the manufacturers separate from the advice community or separate from the regulators or separate from the government. There's an absolute willingness for everyone to go, if this is going to be a successful venture, we're all in the same canoe, and we're only going to be as good as the people paddling in the same direction. And I think hopefully by the end of today, we'll all get a sense that that's very much where people are at. You know, if I just segue briefly into the benefits of financial advice for the advisors in the room, you folks know this every day. I mean, this is powerful stuff for the New Zealand community. How to figure out what your future looks like, how to invest your money, how to buy your business, how to protect your family, how to manage estates, etc., etc., etc. But when you look at the data, and this is just data from the Financial Planning Standards Board, but there's data pretty much all over the world that says something roughly between 1 in 5, maybe 1.5 in 5 people are actually getting an advice relationship. You know, maybe we're part of that 1 in 5. So there's a huge and crying need for us to get beyond our own conversations into the community more broadly, because there's 4 in 5 or 3.5 in 5 or 3 in 5 New Zealanders today that need the help that we as a sector can provide. And the question is, how do we do that well? How do we do it effectively? How do we do it in their interests all the time? And I think that's kind of where we've got to head to. Last slide for me. This is just some of the stuff that's occupying our mind within the FSC. It's a bit of a word cloud. So there's a lot of stuff right now in front of us. Culture and conduct is going to be big for 2019 and 2020 and likely beyond. But we've got to look beyond the horizon. And in the panel discussion, we'll tease some of this stuff out. But there's so much more we can be doing and so much more we ought to be thinking about. And clearly within our business and with our members' businesses, this is some of the stuff that we're focused on. So let us get into the spotlights. And the first person into the spotlight is Sharon Corbett from MBIE. She manages the financial markets team. We kind of say all roads lead to Sharon because there's so much consultation going on, so much good conversation, whether it's law reform, whether it's KiwiSaver default reviews, whether it's codes and so on. So delighted to have Sharon on the stage. So please give her a warm Auckland welcome. Thank you, Sharon.
Good morning, everyone. As Richard said, and for those of you here who I haven't met yet, my name is Sharon Corbett and I'm the manager of the Financial Markets Policy team at MBIE. I thank you all so much for coming along this morning to engage with us about the upcoming changes for the financial advice industry. So for the next 10 to 15 minutes, I'm going to give, firstly, a really quick overview of the changes that are coming. Secondly, I'll give an update on the bill's progress and where all the other bits of the puzzle are at. I'll briefly cover the government's response to the conduct and culture reviews so that you get a sense of how that fits in and how that might play out over the next year or so. And finally, I'll give you the latest that we know in terms of timing for these changes taking effect. There's 3 key messages that I'm hoping you will take away from this morning. Firstly, these changes are coming soon. I know that for lots of us here in this room, it feels like it's been a really long journey in terms of developing this new regulatory regime. Plus, there are still a few unknowns. So I'll give you an update today on where those unknowns are at, but I can assure you all that changes are on the way and on track. Secondly, we recognise that all of this change brings significant disruption for you and for your businesses. These changes are aimed at giving consumers confidence in financial advice by holding all advice to the same core standards. And we heard throughout the review that this should ultimately improve things for the financial advice industry too. Thirdly, I recognise that there is a whole lot of uncertainty right now, given that we don't know the final outcome of the government response to the conduct and culture reviews. I wanted to give the clear message that we really do understand the important role that financial advisors play in helping New Zealanders to navigate complex financial decisions, and we understand the important role that commissions play in remunerating you for your hard work. So turning first to what the new regime looks like. So most of you here, I think, will be well aware of these changes, but I wanted to give a quick overview for anyone who's new here today. So the new law has 2 clear purposes: to improve the quality and availability of financial advice. And unlike the current law, where there are different rules and requirements depending on who's giving the advice, the product that's being advised on, and whether the advice is class or personalised. Instead, the new regime holds all advice to the same clear standards. So some examples are listed on the right-hand side of the slide. So all advice has to give priorities to the client's interest and comply with a code of conduct. And the aim here is that consumers can be really confident no matter where they go for their financial advice. It also means that as financial advisors, you won't need to spend your time worried about whether you're about to hit up against some arbitrary regulatory barrier, since all financial advice is treated in the same way. I know that many of you now are starting to turn your minds to how you want to structure your businesses in the new regime and to getting a licence. So in the new regime, anyone giving financial advice to a retail client needs to be engaged by a financial advice provider who's licensed by the FMA. I'll leave Derek and John to talk soon from the FMA to talk about licensing in a lot more detail. But I just wanted to make the point here that the law has been very deliberately designed to be flexible so that you can structure your businesses in the way that makes the most sense for you. Just before I go any further, some feedback from the last set of Navigating Regulation Summits was that it wasn't really clear to some of you about the respective roles of everyone who was speaking, I think particularly between MB and the FMA. So in short, MB advises the government about how the overall regime should look, and that includes advice on what's in the bill. So the bill sets those high-level duties like the duty to comply with a code of conduct and to have a licence. We're also responsible in MB for setting the disclosure requirements that will apply and for setting the FMA fees and levies for the new regime. The FMA then is responsible for monitoring compliance once the new regime comes into effect and for licensing financial advice providers. And as part of that licensing piece, they decide on what exactly licensing is going to look like, so what kind of information they're going to ask for as part of the licensing process. The detail in the new Code of Conduct is the responsibility of the Code Working Group, which is an independent group chaired by Angus Dale-Jones, who you'll hear from soon. And we all keep in touch regularly with industry associations who have a really critical role in helping you all to transition over to the new regime. So moving over to where everything is at. Firstly, the bill. For those of you who watch parliamentary TV, I was tuned into it last night. It is in the final stages of the parliamentary process. So you may have seen just yesterday that some final changes were made to the bill through this process. I want to assure you all that these are largely minor and technical changes, and none of them represent an expansion to what the bill is doing. I was aware that there were some concerns that we might be looking to expand the bill in light of the conduct and culture work. That's not the case. On to disclosure. So just this Tuesday, we published the government's decisions in terms of disclosure requirements. So amongst other things, anyone giving financial advice will need to disclose details about the services they can provide and any limitations on the extent of the market that they can consider. And they'll have to disclose commissions and any other conflicts of interest that could influence the advice. Now, there's going to be a lot more flexibility in terms of how this information is provided to consumers. So this is a real move away from the current requirement to hand over a piece of paper the moment a client enters your office. And we undertook a lot of consumer testing on these proposals, and it showed a real improvement in terms of giving consumers the information that they need when they need it and in a form that makes sense to them. So a really simple example of this is that you won't need to tell your client about dispute resolution arrangements the very first minute that they walk through the door to your office. Not surprisingly, we heard throughout the review that this kind of doesn't really build consumer trust in financial advice. So instead, the new rules would say you'd have to tell a client about that at the time there's a complaint. So you can find out a lot more about the decisions on the MB website. And we'll also be consulting soon on the regulations themselves, so you can see the detailed legal wording, and we just want to double check that the way those regulations are written works in practice. Onto fees and levies. So MBIE is also developing the proposals for the licensing fees and the FMA levy for the new regime. We consulted just last month, and thank you to everyone who provided input to that consultation. The feedback on our proposals has really been quite positive, so we'll be hoping to finalise decisions in the coming month or two. We're really conscious through this work that costs need to be fair and reasonable, particularly for smaller firms, so that providers can continue to operate efficiently and consumers can continue to access the advice that they need. Onto registration. So providers and advisors are also going to need to register for the new services on the FSP register. The Companies Office is in the process of making some changes to the register at the moment, and they'll be out giving you guidance on how to update your registration details closer to the time. And I'll leave the FMA and the Code Working Group to fill you in a lot more detail on licensing and the Code of Conduct in a minute. Cool, so next up I want to cover the recent government announcements about fast-tracking consumer protection measures following the FMA and Reserve Bank conduct and culture reviews. I've heard a lot of concerns from people that this might mean a ban on commissions is coming to New Zealand, and I heard a lot of questions about what this means for the FSLAB. So as the Minister said in the video earlier, the primary focus of this new work is about plugging a gap in terms of the regulation of banks and insurers. So for example, a question we're looking at as part of this new work is, should there be a duty on insurers to have greater regard to customer interests when they're actually designing their insurance policies? So whereas the FSLAB is already kind of strengthening the regulation of financial advice, this new work is about asking others in the sector to have responsibility for consumer outcomes too. The upshot of all of that, and as I said earlier, is that the FSLAB will be continuing as it is without any last-minute additions. However, there are clear links to advice, since the government has been really clear that it wants to take a close look at all incentives paid by banks and insurers. They've been really clear that this includes all incentives paid internally, so things like sales targets, bonuses and leaderboards for frontline staff. What I'm sure is on all of your minds is, what does this mean for commissions? As the Minister said, commissions are a legitimate means of remunerating advisors who do a really great job of finding the best product out of many for their clients. And access to that kind of advice is absolutely critical for New Zealanders who are so often overwhelmed by the financial choices that they face every day. So when we go out and consult, probably in May, on the regulation of financial institutions, we're going to be asking how commission structures work and how we can ensure that the way commissions are paid is aligned with good customer outcomes. And that really includes safeguarding access to financial advice. So finally, I would like to cover timing. So far, everything is running to the anticipated timeframe. As this slide shows, once the Code of Conduct is approved, there'll be a minimum of 9 months before the new regime takes effect. And that includes at least 3 months for you to get your head around all the new details, and then at least 6 months in which you can apply to the FMA for a transitional licence. After that, to enable smooth transition, there's a 2-year window for existing advisors to meet the new competency standards. So at this stage, we expect transitional licensing to open towards the end of this year and for the new regime to take effect in the first half of next year. We'll let you know exact dates the minute that they're confirmed. So that is a whirlwind tour, really, of where everything is at. We're very close now to a new regime that will hold all financial advice to the same clear standards and build consumer trust in financial advice. I'd like to thank everyone who's come along today and who has engaged with us over the last 4 years and inputted to the review. I recognise that every time you do these sorts of things, it's time spent away from working with your clients and helping them to make better financial decisions. Thank you.
Fantastic. Thank you, Sharon. I'm delighted now to welcome John Bodica, Director of Market Engagement at the FMA, to the stand. And similarly, John and his team have been everywhere. They're on podiums right across the country, and that openness and willingness to engage is very much appreciated. So, John, welcome.
Good morning, everyone, and welcome. Thank you for the kind invitation to come along. Our popularity blows me away. 800 of you here today. So thank you for the opportunity. Important changes ahead. Congratulations, Richard, on putting the event together. Navigating through regulatory change, a very apt theme for what's ahead of us. Today I want to talk a little bit about some of the reference points ahead, in particular looking at some of the licensing decisions that lie ahead for you. So over the next 15 minutes, what I'd like to do is cover three things. So we're going to talk a little bit about the who. So who will need a license to provide financial advice? Then a little about the what. So the licensing, what the licensing process will be like. And then the when. So when you need to be ready to act. So really a key message or key themes that you'll hear from us today is now is the time to get ready, now is the time to start preparing. So you also heard today with the clip from the Minister and also Sharon talking this morning a little bit of the snapshot of the key changes. But in particular, they both spoke about the progress of the bill. Perhaps I think as early as next week, Sharon, we could perhaps see the bill passing. So with that expectation and on the basis that it's likely to pass without any further substantive changes, now's the right time to start focusing, as I said, on the who, what and the when, particularly around licensing. So who will need a licence to provide financial advice? Questions that we have been getting from you, who needs to be licensed and what are my choices? The choices you make will depend on your goals. It will require some thought as to what success looks like for you and your clients in the new regime. So what decisions do individuals need to make? Firstly, if you are not planning to get a licence in your own name, then your first decision is whether you wish to be a financial advisor or a nominated representative. For many of you, this decision might be straightforward. For example, QFE advisors will most likely become nominated representatives given the nature of their roles. Authorised and registered financial advisors are more likely to choose to become financial advisors. Behind this decision is the degree of professional flexibility you enjoy today and want in the new regime. Also, you won't be able to call yourself a financial advisor if you are a nominated representative. This route, however, may not suit everyone. If that is you, then please do talk to us or the experts here today about the steps you can take given your situation. So we have developed a decision tree on some of the pathways for you to consider. So that's just the top part of the decision tree. It's a snapshot. So we've got copies of our stand here today, so if you'd like to come and talk to us, we can take you through some of those decisions that are ahead of you. Secondly, you will need to decide whether to be a financial advice provider or not. You can choose to operate under your own licence or someone else's. If you choose to operate under someone else's licence, then your goal will be to find a suitable licensed financial advice provider. So what decisions do advisor businesses need to make? For advisor businesses, the choice is about how you want to run your business. In particular, it comes down to your preference for managing compliance. You may, for example, not be entirely comfortable with managing compliance yourself. And if that is the case, you may look at a structure where your firm becomes an authorised body under another entity's licence, rather than applying for a licence yourself. There are a few other variables, and likewise, if you'd like to explore these further, then I invite you to come and talk with us at our stand today. Another important question is, what will your obligations be if you give financial advice to clients or engage other people to give that advice? One thing that is often overlooked is that all the new obligations under the legislation come into effect once the new regime comes into force. At the time, transitional licences become effective. There are 8 new statutory duties that will apply to everyone giving regulated advice to retail clients. This also includes a statutory duty to meet the competency requirements that apply when the legislation comes into force. They will set out the new code. They will be set out in the new Code of Professional Conduct for Financial Advice Services. However, a competency exemption applies throughout the 2-year transitional period for many people. So do remember that the competency exemption is not a conduct exemption. For those of you who are keen, Section 431 of the draft legislation lists out the obligations. Let's talk about the what the licensing process will be like. We will be developing clear and easy to understand licensing guides to help applicants through the licensing process. Nonetheless, a few words on licensing. There are 2 phases to the licensing process, transitional and full. Transitional licensing will be straightforward and fully accessed online. However, with a large number of applications expected, it's best to get in early once applications open. As part of the process, we will ask you to provide key information, including information so we can be satisfied that the directors and any senior managers within the businesses are fit and proper to hold their respective positions, and there is no reason to believe the applicant will contravene. The information you provide gives us a better picture of the market structure, number and type of advice firms, and the type of advice provided. So the sorts of things we'll want to know: the who, your details and details about your senior managers and directors. This information will link to the FSP register, so you will not have to re-enter this information. The what, details about your business, such as what products you expect to advise on, and other arrangements such as authorised bodies, etc. And the how, the likely number of advisors in your firm and the mix of financial advisors and/or nominated representatives. We will slice and dice the information to help us take a risk-based approach to our supervision and monitoring in the transition period and assessment of full licence applications. While there may be some instances when we need to get further information to assess a licence application, in most cases, we expect your transitional licence application can be processed without any further request for information. We've also been asked about full licensing. Full licensing will also be an online application process. The process of applying for a full license will, however, be more involved than transitional license. However, the information you need to provide will vary depending on factors such as the size and nature of your business and the services you provide. Whether you are a single advisor business or engage nominated representatives or more than one financial advisor. Licensing can be a substantial regulatory burden for businesses. We recognise it is important to ensure an appropriate process so that licensing does not become an unnecessary barrier to entry. Our licensing approach is risk-based. Applicants who may present a higher risk of harm will receive greater scrutiny than an entity which is viewed as lower risk. Applying a risk-based approach to licensing allows us to assess applications efficiently, reducing the need for further engagement with lower risk applicants. For example, an applicant that will have nominated representatives or will give advice through individuals who need to rely on the applicant's procedures, systems and expertise to meet competence requirements can expect their licence application to be subject to more scrutiny. While small businesses with no nominated representatives and who only give advice through financial advisors who independently meet competence requirements will find it relatively easier to obtain a full licence. As a final point, the structure you have in place when you get a transitional licence won't stop you having a different structure when you apply for a full licence. Even after your full licence has been granted, you will be able to apply to vary your licence. Enforcement. Thank you, Richard. What will be our approach to enforcement? One question asked by advisor businesses is about our enforcement approach in the event our monitoring uncovers non-compliance. We expect most participants will comply willingly with the regulatory requirements if they know how. We will look at educating and meeting with these participants. Other participants, including minimalists, opportunists, and deliberate or reckless non-compliers, require further incentives to encourage them to comply. For these participants, a range of regulatory tools are available, including meetings, feedback letters, warnings, directions, or stop and prohibition orders. For others who engage in serious misconduct, prompt and effective prosecution or civil litigation is required to hold the offender to account, to punish the misconduct, to denounce and deter, and or to achieve compensation for the aggrieved parties. The choice of tool depends on the seriousness of the non-compliance, the impact and potential harm. So on to the when you need to be ready and act. As I said at the start, now is the time to get ready. So how long have you got? There are 3 key time periods to note. Right now, you have approximately 6 months to prepare for transitional licensing. Following that, you have approximately 6 months to apply for a transitional license and prepare for the new obligations and duties coming into force. And then up to 2 years to the start of full licensing. The specific dates are dependent on when the code is approved and timing of FISLAB passing into law and the regulations. Both financial advice providers and individuals who intend to operate under someone else's licence have just over 12 months until the new legislation will come into force. That means getting ready to meet your new obligations and your duties. So to conclude, 3 key messages for today. Now is the time to consider choices you need to make about how you will operate under the new regime and whether you will apply for your own licence. Transitional licensing is designed to be straightforward and will be fully online. There is flexibility to change your approach along the way, so don't panic. We will provide guidance to help with your preparation and licence applications. If you haven't signed up for our regular updates, then I recommend you do so and come visit us in our stand today. So don't hesitate to come and talk to us with any of the questions that you may have. So I hope that's provided some pointers to help you navigate through the changes ahead, and as I said, encourage you to prepare now. So thank you for listening, coming along today. It's been a pleasure to be here. Thank you.
And our third spotlight, big warm welcome to Angus Dale-Jones, who is chair of the Code Working Group. A warm welcome as well to a number of his committee members who I've spotted in the room. And Angus is going to give us a little insight into the code. And please, warm welcome to Angus.
Thank you, Richard, and thanks everybody. It's great to be here and great to have this turnout. I'm here to talk, as you know, about the Financial Advice Code, which is a sort of working title that we use, but I am delighted that in the full title of the code, which you see up on the screen, it's still got that word professional. And at the end of it all, the code is all about attitude and aspiration. And if we lose that professionalism mojo in what we're doing, it all really doesn't matter. So, having that focus there of professionalism, whatever it means to different people, because everybody's got a different spin on it, but it makes people think more broadly than rules. And that's what the code is trying to do. I've got to press the green button, apparently, and it worked. So I suppose the most important thing about the code in terms of the way the regime works is that it's part of this broader regime. It doesn't stand alone. The code applies if a couple of triggers are met, and those triggers are, it's got to be regulated financial advice, and that's defined in the legislation, and the client has to be a retail client, again defined. And then the code does two things. It provides standards of conduct, how you interact with your client, and it also provides standards of competence, the competence and skills you need in order to carry out that interaction. But it's the fit, its place in the overall regime that is critical. And so if you see the moving parts, and you saw those in Sharon's presentation, you've got the legislation, you've got the regulations, you've got the FMA license, and you've got the code itself. So obviously in the code working group's deliberations, we've spent a lot of time thinking about what conduct standards look like, what do competence standards look like, but we've spent as much time, if not more, understanding that fit. And the feedback that we've got through our consultation processes from you and others has been incredibly helpful in trying to get that fit right, working out what belongs with the legislation, what belongs with the code, and what belongs with licensing. And so just a few words about that. The code tries to apply to every advice situation. So there's some things, particularly process-related things that relate to the financial advice provider, the entity, if you like, that don't actually belong particularly neatly in the code and are best left for licensing, and we've attempted to do that. We've tried to keep in the code those things that can apply in one way or another to all advice situations. So that's looking in the direction of the process, if you like, but looking in the direction of the overall umbrella of what's around the advice process. We look to the legislation and note that this legislation has picked up some things that under the old Financial Advisors Act lived in the code itself. So when you talk about giving priority to clients' interests at the time of a conflict, or when you talk about the nature and scope of advice, those things were dealt with in slightly different ways in the code itself in the previous regime. Those now sit in the legislation, and we've been respectful of that. We've tried not to trample in that area. And lastly, when it comes to the disclosure regulations, we've tried to leave it to the regulations to deal with how you need to tell your clients things. We focus more on the principles about understanding. So throughout the code, we have continued this theme of a principles-based approach. We want it, as I say, to apply to, in a flexible way, to a wide range of situations, and we want you to be able to determine what your business model looks like. It is not the code's role to tell you how to structure your business. The code needs to be able to articulate principles of advice that would apply in all situations. I don't know whether that actually, yes it did. So we've tried really hard to make sure that the code is not a rule book. We've tried to design some signposts. When you start to discuss professionalism and conduct, it's very easy for them, as they sort of, as you sort of treat them as buzzwords, for them to mean all sorts of different things. And I don't think the code's job is to give you the precise answer, but it is to help you, to point you in the right direction of your thinking so that you can do the right thing by your client. So we're setting the standard, we're not setting rules. We've got commentary in the code, and you will have seen this from our consultation towards the end of last year. That commentary is there to aid compliance. And quite interestingly, when it comes to competence, those people who've operated under the Financial Advisors Act are used to the competence standard that says you need to pass this exam, basically. And now we've moved to a competence standard that's much more a principle, and then in addition to articulating that principle of competence and doing it in a way that it applies whether you're a human being or whether you're an entity, which proved to be quite difficult, we also articulate a non-exhaustive list of ways of demonstrating that competence to help you, so that if you don't directly meet what's set out in the standard, there are some other ways that you can do it and be assured that that is also complying with the standard. So a big part of the code, of course, is to make sure that the code is helping meet the purpose obligations of the legislation. Now, the advice provisions have those two key provisions of making sure that the quality of advice is maintained, but also that advice is available. But on top of that, there's some broader obligations in the legislation, and there's some up there on the screen that we've been really conscious of. And can I just highlight the avoiding unnecessary compliance costs? Doing unnecessary things in the client interaction, burdening your client with paper that the client is unlikely to ever read and unlikely to get any benefit from. I mean, although part of that job is the disclosure regulations, we've tried really hard not to create a world where compliance complicates the interaction with the client rather than supporting and enhancing it. So I've already mentioned briefly that we're grateful for the feedback that we've got through consultation, but I'd like to say a big thank you in all of our rounds of consultation for the feedback received. It's been incredibly helpful. And you've all played a part in that. In terms of the next step, the code has now gone to the Minister, as you know. There are sort of two triggers before we go beyond that. The Minister's review has to happen, and he's required to liaise with the FMA in that process, and the legislation has to pass. You can see from the conversation today that things are now moving really, really quickly, and we expect that to be a smooth process. Well, maybe smooth is a bit optimistic. I'm sure we'll have some conversations, but I'm sure it's going to happen. Next out from us will be the publications of the submissions that we received from our October-November consultation. So that's only a few days away. It's close, and I can't see the rest of my slides, so I can't remember the rest of my points. I don't know whether there's a way of bringing it back again. The last point on the slide was next steps in terms of what you can do. Oh, there we are. Yes, sorry. Then after that, we will, when the code's ready, we'll publish the code with the impact analysis and the summary of submissions. And to quickly explain what that is, the impact analysis looks at how the code, if you like, delivers to the purpose statements of the legislation. And the summary of submissions takes all of your submissions and includes some articulation from us about how we've responded to those things. And it's a bit pointless publishing those supporting documents without the code itself. So that'll come. Future maintenance of the code is not a static document. This space will evolve over time, so there will be future iterations of the code. Next steps for you, obviously your big focus now as licensed businesses or people working within the regime is to look at how you're going to satisfy the licensing requirements. But from a code point of view, two messages. The first message is the big thing about complying with the conduct standards is how you and your business put clients first. So think about how you do that. How do you treat clients fairly? and you're going to get to the right answers that way. And in terms of competence, we've been talking about level 5 for a long time. I'm not going to go into the detail of precisely how that's played out in the code, but that's the zone you need to be looking at. I should add there that we're taking the focus away from just that introductory educational standard, and we're trying to get people to think about their continuing professional development as well. And if anything, that becomes more important than just getting to that baseline standard. And that's us. Thank you very much indeed.
Thank you, Angus. Okay, our fourth and final in the Spotlight series. Delighted to welcome Katrina Shanks to the stage. Katrina is the CEO of Financial Advice New Zealand. As I said earlier, having a really strong, productive and powerful financial advice representative body is really important, and we within the FSC want to and will work closely with them. So, Katrina, welcome, and floor is yours.
Richard, thank you for having me here today. Thank you for putting this on. It's a wonderful turnout. Thank you for coming, everybody. Normally I use a roaming mic because I kind of roam when I talk, so I'm going to try and stay close to the mics as much as I possibly can. Obviously, what's under the spotlight today? A lot is under the spotlight. There's a lot of noise out there. We've got change in regulation, we've got FSLAB, we've got licensing, we've got disclosure coming up. We've had 2 lots of reviews come out. We've got Australia happening over there, which is really noisy as well, which impacts on what happens over here, because it does influence in the thought processes in New Zealand. So a lot's happening in a really small period of time. And I've got to honestly say, I've never seen a sector which is under so much change, with so much noise, with so much commentary, ever, I think, actually in New Zealand. So I want to congratulate you for staying true to what you do every single day, delivering a wonderful service to New Zealanders, making a difference in their life every single day, and not being overwhelmed by all the noise that's happening at the moment. So what are we striving for? I think we all want the same thing: regulators, legislators, officials, financial advisors. We want to build public confidence and trust in seeking financial advice, and we want to grow a thriving advice sector. That's absolutely important for New Zealand, that we keep on looking and striving to do that. And that's what all this change is actually driving towards. Then we've got the change in the regulation, and we've got the change in the Tasman, and the noise that keeps on coming, and the commentary around that makes it really, really difficult for us to focus on what we actually need to focus on, and that is good outcomes for consumers. That's what everybody's focusing on, and that's what consumers want as well. And that's really positive. We're all driving in the same direction. There are 2 ways we need to respond to all this change, though. One is a financial advisor. What do we do to respond to this as individuals? Then what do we do to respond to this collectively? Because there is a collective approach towards this. You're not on their own. We can work together to get through all this change. But I think we need to remember, when we're talking about this change, and it's fairly big, regulation doesn't change your business. It doesn't change it at all. It provides a framework for your business to operate within. So as much as we're hearing about what you need to do about licensing, and do I need to be a FAP, or do I need to join someone else's FAP, that is only the framework. We're still delivering high quality financial advice every single day. So as a financial advisor, what should we look like, and what should we be striving for, and what does the future look like for us as financial advisors? Clients come first. You're hearing that everywhere. It's in the legislation, it's in the regulation, it's in the code. Clients come first. And you already do that 99% of the time. Clients do always come first, because you're there to serve clients. It's about excellence in advice. It's about outstanding service. That's not new to any of us, but what is changing is customer expectations. What customers do now when they go somewhere, they're looking for excellence, they're looking for outstanding service, but they're also looking for an experience. They want an experience when they go somewhere, and what does that look like? For financial advice, it's about the relationship. It's about how you talk to them. It's about how they feel when they walk out of your office or after you leave their home. How do they feel about that experience they've had with you? It's like when you go to a cafe If you went to a cafe now and you got instant coffee, you'd be shocked. If you went to a cafe now and you got plunger coffee, well, you know, coffee in those filter coffees, you'd be shocked. When you go to a cafe now, what do you want? You want a latte, you want to have a nice seating area, you want to have it to be buzzy around you, you want it to be clean. That's that expectation, that's the experience that you have when you go to get a latte. They want the same experience when they seek financial advice. What does that experience look like, and what do you give them, and how do they feel when you leave them? We need to be adaptive to change. We need to be adaptive to the environment that's changing around us. Having FAPs will change the environment. The businesses may cluster around you slightly differently. You've got to be aware of what those changes look like. Technology is going to change. Robo-advice is going to come here in a form. How are you going to be adaptive to that, and how are you going to be competitive with that? What part of your advice is going to become a little bit robo? Regulation, you've heard about it this morning. That's another part of the change that you have to be compliant with. People are going to be wanting you to have a professional qualification at some stage. You go to the hairdresser, it takes them 3 years to be qualified as a hairdresser. When you go and give financial advice to somebody, what do they expect from you as a qualification? How do you tell them that you're going to be relevant with your education and your knowledge? How do you tell that to the client when you go and see them? What does that look like? Is that being part of a professional? It most probably absolutely is, and that's what we are, professionals. How do you be transparent, relevant, and modern? Because that's what your businesses are going to have to look like in the future. So, who am I? What advice do I want to provide? How do I want to provide it? How do I want clients and potential clients to view my advice business? What do I have to change to achieve this? This is your business. This is your value statement. This is your brand. This is how you sell yourself in the market. This is what you look like. This is the time right now to lift the hood off your business and have a look in. Am I actually who I say I am? How am I going to deliver it? What is my value proposition? Now is the time to think about what this is going to look like for you and in the future, especially when you're looking at licensing. How will that affect me and my business? Will I have my own FAP? Won't I have my own FAP? Will I join another FAP? Will I have to change? Will it change who I am, what I want to deliver, and how I want to deliver it? These are all the questions you need to be asking yourself right now. How am I going to operate? Am I going to be compliant? Am I going to be effective? Am I going to be efficient? Can I do it myself? Now are these really important times to consider all that as you give financial advice. So on top of that, once you've worked out who you are, what are you going to deliver, is your business fit for the future? What do I have to change? Then you need to say, how am I going to be compliant with the code? How am I going to operate within a FAP? What are my duties? How am I going to evidence my duties? Whether you're in a FAP or not, as a financial advisor, you have 8 duties which you have to deliver under the legislation. Do I know what those duties are now? Am I going to be compliant with them? What do I have to do to change? How am I going to disclose? That's going to be really important for that transparency. And are remuneration models going to change? And if they do, what does that look like for me? But you've got to stay true, firstly, to who you are, what your value is, and how you're going to deliver that. So what can we do collectively? Obviously, there's a huge amount of change in front of you. So there are 3 areas we can do collectively, which is advocacy, promotion, and standards. And when I was putting these slides together, I was thinking, actually, that is the pillars of what financial advice are: advocacy, promotion, and standards. I'm just going to whip the sticky plaster off advocacy and say, I've had a lot of feedback that you don't feel that we have had a strong enough voice for you in the media with all the change that's been happening, especially when the RBNZ FMA report came out. So we've heard that, and we have tried to get a stronger voice in the media for you. But the one thing that we have been lacking in the conversation is some strong, independent evidence to show consumer outcomes are good from financial advice. So when we get that body of evidence, it's much easier to tell our story, So we're working behind the scenes now to develop that body of evidence. So when people say, what is the value of advice, or it's all about the sale, it's not about advice, we've actually got this independent body of evidence to stand by and say, actually, the people that use financial advisors have great financial outcomes. It increases their financial health, wealth and well-being. That's what we've got to be able to say with confidence and with third-party evidence to back it up. So the other thing which I have found a little bit irritating myself is in the media where they talk about sales incentives and putting remuneration commissions under in sales incentives. Actually, there's nothing wrong with receiving commission as a form of remuneration. Nothing wrong with that at all. And we've got to own it. And what people have to understand is it's different to sales incentives. A remuneration model is not a sales incentive for an overseas trip. They're totally different. And we've got to keep on talking about it, and we're going to keep on talking to the officials and the regulators about how we can change the language so actually it's better language and people can understand it better. It's not quite as emotive out there in the media. So promotion is another really big area. So once we've advocated to our stakeholders, which is the legislators, the regulators, the officials, the other industry players, it's actually about then how do we tell New Zealanders about the value of advice? And there's a couple of ways we can do that. We can do it through a social media campaign, which we've already done as Financial Advice New Zealand. We've been going for about 8 months now. We've reached about 2 million people. We've had 10,000 people come back to our website. We've had about 5,000 people seek financial advice off that website. It's keeping on telling the story and educating New Zealanders about the value of financial advice. We can do that on your behalf, but we all really need to do it together to get a really good impact across New Zealand about seeking financial advice and the value of it. Because we know those that do seek financial advice value it, those that don't understand it. So we've got to start talking about the value of financial advice and also getting the other stakeholders to start talking about it as well, like the government, for example. So the other area that we can do collectively is standards. If we want to increase public confidence and trust, we've got to promote ourselves as having high standards within the sector, and that is driving to education outcomes, that is driving to qualifications, that is driving to having professional development. And let's talk about it. Let's talk about how well we are educated and how well we are up to date with what's changing and relevant to those around us, especially those that we're giving advice to. So you've heard about this, so I'm not going to bang on any more about these reports, because you've had a bit of an update on those. So we came here at the beginning to talk about how do we build public confidence and trust, and how do we put ourselves forward as financial advisors. It's about being professional. It's about focusing on putting the client first. It's about promoting the value of financial advice. It's about qualification standards and professional development. None of this is new to anybody. But this is what we are here talking about today, and this is what all this change is driving towards. With all this change and all this noise, I just want you to really go away and think about what we need to do collectively, what we need to do as individuals to ensure we're in the right space for all this change. But I want to leave you with one quote from Steve Jobs. Sometimes life is going to hit you in the head with a brick. Don't lose faith. Thank you.
When a community gathers together, we're pretty focused on our own stuff, and that's absolutely appropriate. But what we're now going to take is a little segment where we're actually going to focus on some other issues in the community. And it's no surprise that mental health is, the statistics in New Zealand, frankly, are devastating and tragic. My 17-year-old boy was at school last year, and one of the boys in his football team took his own life. And in that context, I wanted to invite Jazzy Thornton from Voices of Hope, who was a superstar at our conference last year with such a powerful and engaging message. And Jazz, why don't you come and just share with us your story, and then we'll head from there. Thank you.
Oh, I feel like this podium's as tall as I am. Hi. Like Richard said, my name's Jazz Thornton. I'm the co-founder of Voices of Hope. For those of you who don't know, Voices of Hope is a mental health charity that myself and my co-founder Genevieve Moore, who's somewhere in here, founded at the beginning of 2017. We both had our own stories. I grew up with childhood sexual abuse, tried to take my life for the first time when I was 12, and then many more times throughout my teenage years, comas, I was in the psychiatric unit, and then I had a conversation that changed everything, and I was able to learn how to fight for my life, and now I get to fight for other people, and it's amazing. And there was people who would have been at conference last time. If you heard me speak, I read out an email from a mother that had seen one of our videos. We launched a video to begin Voices of Hope, and that video got over 80 million views very quickly. It's called Dear Suicidal Me. And we had people donating to us from the financial conference, and I just wanted to read out another email that we've had since. Some of you may have seen it in the media in the last kind of 48 hours or so, but we released a brand new series called Jessica's Tree, which is about suicide, and the people who donated last time. This life has been saved because of you. Hi Jazz, I hope you don't mind me emailing you. I just wanted to message and say thank you. On Monday, I had made the decision to take my life. I've been struggling with depression and PTSD for 3 years. I'm 17, and I've finally given up. I wrote my suicide note and was just waiting for my mum to leave work so I could go through with it. I sat in my room mindlessly scrolling social media while I waited for her to go, and I came across the trailer for Jessica's Tree. I watched it and just bawled my eyes out. Something just clicked, and as I watched the video, I realised I couldn't do it. I couldn't kill myself, so I ran out to my mum, told her everything, and now we're going to get help. Thank you so much for what you do, and thank you for creating Jessica's Tree. It just saved my life. And that's the kind of thing, every individual life, there's been thousands of messages like that have come through. Since we launched Voices of Hope, we wanted to be able to create something that we needed when we were going through the things that we were. And now we've been able to travel the world. We've spoken in high schools across Australia and New Zealand, events around the globe. We create online video content and campaigns around mental health and suicide. We did a men's campaign called It's Not Weak to Speak as well, and that got men speaking across this nation, which was really great. But this is something that Jen and I, we both have full-time jobs as well to try and, do Voices of Hope on the side. And what we've done in the last couple of years, we've seen impact like that email that you've just heard. We've had, when we're in high schools, the response has just been phenomenal. And our dream is to one day be able to work for Voices of Hope full-time, to be able to do this for a living, but also to be able to branch out. We've done a lot of stuff within the workplace, and there's a big focus on youth suicide, which is huge. We have the highest rate per capita in the world, but also 69% of our own statistics are middle-aged men. And out of that percentage, 84% of them are in the workplace. So we're not just talking about teenagers, but we're talking about the people that work with you. We're talking about your business partners, your friends, and so we're wanting to be able to branch out and continue to do work, not just with our young people, but also with the people like yourselves, the people in corporate industries that this is affecting, because mental health affects everyone. It doesn't discriminate. It doesn't matter what your upbringing is. It doesn't matter how wealthy you are. It doesn't matter where you come from. Mental health doesn't discriminate, and so that's that's what we do. That's what we've been doing for the last couple of years, and we hope to continue to do for the rest of our life. And we're so thankful, Richard, for you guys to be partnering with us as your charity partner, both for the last conference and for today. We're going to be out in the foyer with our Give a Little page if any of you feel like you want to help us to donate and to help us reach your kids. If you've got teenagers or your workmates, we would absolutely love that. But thank you so much for your support. It means the world. Thank you.
Delighted on this panel to be joined by all the people you met before, so I won't reintroduce them. But in addition to those wonderful people, we're joined by Nadine Terriora, who is the CEO of Fidelity Life and also sits on the FSC board. And we're also joined by the very inimitable Derek Grantham from the FMA, who again is probably no stranger to many of us who we've seen around the traps. We're also going to be IMAGing this, so if you can't see on my left, we will be putting it up on the screen. So hopefully you can see the whites of the eyes of the speakers. I'm going to kick off with the first question. I'm going to ask it to Derek. And it was one that raised a lot of debate yesterday in Wellington. And the first question, Derek, if I can, is just talk to us about conduct. What does good conduct look like? And why is it important?
Thank you, Richard. I had a feeling I shouldn't have sat in this particular position. I'll be first off. But I think if that was the only question that we asked today, that is exactly the right one to ask. It is that important. So conduct is important because it affects consumers. And in the end, good conduct, or at least high standards of conduct, support fair and efficient and transparent financial markets. So what I mean when I say conduct, it's actually about behaviour. It's about how we behave, and particularly how we behave when other people are not looking. An important element of that, is you've touched on, is culture. And culture is important because from a leadership point of view, it's around how we set expectations, how do we identify breaches, and how do we act on them. But really interesting about culture is the notion that it's not only organisational culture that's important. One thing to think about, I think, is professional culture. What is the culture of the profession? What is it? How is it that we act? What is it the things that we do? What's acceptable and not acceptable from a professional point of view as well? So in the end, all of this is important because, as I say, it affects consumers, but also because it's the difference between having confident consumers engaging, investors engaging, consumers engaging in financial services.
Derek, thank you. So if you're running a business in the room, what does it actually look like when you say good conduct? Like, what should the leader of a business be doing and saying and displaying that, in your view, with your private citizen hat on, but also as an FMA hat on, that would exhibit that kind of behaviour?
Yes, I think, look, that's a good question. And one of the critical thing is being really clear about what customers care about and customer expectations, and having a very clear and firm view of what that looks like in our business, and articulating that particularly well, and actually leading from the top, getting the tone at the top right, and making sure that that is wired in the DNA of the whole organisation.
It's interesting, kind of that, if I can chip in there as well. This when you talk about culture, and it's kind of the way things are done, sort of, and values. But when you talk about behaviours and shared assumptions, they're kind of not really things that you can write down quite sort of easily, sort of within the firm. So when I look at it, I kind of go a simple example that says, so you have an employee who records the highest sales or highest revenue, and that employee is promoted. So then you kind of get the picture that says, that's the assumption that says achieving high sales is more important than anything else in the firm. Whereas if you have the employee that's actually provided the best customer outcomes and best customer service, and not necessarily the highest revenue, and that person's promoted, then you have the assumption in the firm that says doing the right thing by the customer is more important than anything else that happens in the firm.
So that's really interesting. Nadine, if we can go to you. You lead a large business in Fidelity. How does good conduct play out within the context of not only your staff, but also the clients, the advisors, the customers, the clients that you serve?
Well, firstly, I think I would say I, as everyone else in this room, feel incredibly proud to represent this sector and the work that we do, because it's really, really important. And it's clearly important because customers seek out advice for a reason, because they don't have the answers, and they're seeking professional advice so that they can actually get the right answers to suit their specific needs at that time. And I think conduct and culture do go hand in hand, and culture is leader-led. It starts with the board, filters down to myself, and then it filters out through the organisation. And culturally, I think everybody in this room and at Fidelity Life turns up every day with noble intentions to do the right thing by the customer. And I think it is linked to the DNA within the business, and our DNA is to put the customer at the heart of everything that we do. And I think it's about making sure that, again, as your brand, in my case, the Fidelity Life brand, we're proudly an independent advised brand. what are the values and behaviours linked with that brand in terms of culture, and are we deliberately and seeking out and celebrating those behaviours and those values each and every day? And I think this is where it gets into this interesting conversation, which has already been referred to, around how do we actually get this balance right around driving appropriate behaviours and rewarding the right behaviours, but balancing the fact that we actually do need this sector to thrive. So making a profit isn't a dirty word, because actually we need the sector to make profits, we need the sector to grow, and clearly we've got a ways to go. And I think the conduct lens is very much just that framework to ensure that the things that we do from a culture perspective are actually demonstrating professional outcomes, and we're holding ourselves accountable within that framework.
So one of the call-outs of the Life Insurance Conduct and Culture Report, one of the highlights, if I can, was the work that the claims and the underwriting teams do. Within your world, how does that play out in terms of the way they think about the customer and the way they think about the right outcome?
I think first of all it's about being solutions focused. One of the things that's incredibly important to me in our business is that when we're working with advisors and the advisor's got their client that clearly has a need. So if I talk about the underwriting space for a second, you know, the underwriters are really focused on how do I find the right solution to assess this risk so we can actually give this customer some cover. And I think what was so rewarding in the reviews that I've done recently, that it really celebrated the fact that people at the front line are doing good things for customers, and they're actually supporting advisors to get those outcomes. On the claims side, it's actually about the focus on how do we pay this claim? How do we support this customer in clearly a really important time in their lives? Our job is actually to deliver on the promise the advisor made, and make sure that when we deliver on that promise, we make it easy, and we actually ease the burden that customer's clearly facing at the time. And I think that these are the messages that I'm really passionate about getting out to the communities we serve, because if we're actually going to raise the level of insurance within our nation, which we haven't done for many, many years, I think it really does come to the fact that we've got to talk more about the good stuff that we actually do, the great advice we provide, how we provide it, and the importance of actually having a plan and having cover. And when we pay out that claim, what it actually means in doing that. You know, it's providing that financial assistance during what is typically a really, really challenging time.
I'm going to bridge, thanks for that, I'm going to bridge from the discussion around conduct to the discussion around professionalism. And Angus, if I can start with you, and Katrina, I'll head to you then after. Angus, you've shed some light on the process that the Code Committee went through to kind of get that nexus between conduct and professionalism. Can you, without sharing any confidences or breaking any laws, can you share with us the process and kind of where your landing point roughly was? How did you play that difference out?
So I think the thing is the code sits right slap bang in the centre of, it doesn't really matter whether you call it professionalism or good conduct, but those sort of subject areas that are difficult to define. And I think a big job of the code is helping people navigate that. And so in terms of the process we've brought to it, it's sort of turning it around, because we all, on the code working group, but I think more broadly, we all know when good conduct or professionalism is done to us. But in terms of articulating how you do it to somebody else, that's a much more difficult job. And I think in terms of our process, it was a matter of distilling it down into a couple of elements. And I mean, this is not particularly well thought out, but I think one of those elements is attitude. You know, the code speaks to the attitude the advisor and the advisor business needs to have. And the attitude is more than just frontline staff need a smiley face. The attitude is deeply embedded in the decisions of the business and the direction and strategy of the business. And so it's trying to formulate code standards that help navigate people in that direction. But the second, and I think in some ways this is almost more important, it's understanding that these areas like good conduct and professionalism, that you don't reach a point of perfection straight away. You probably never reach a point of perfection. It's an iterative process. So as important to good conduct and professionalism, and I hope this comes through in the code when you see it published, is to have processes in place that give you that feedback loop, that help you quiz yourself and quiz your earlier decisions and test whether they are working in the way that you want to work, and whether that's listening to your complaints or other ways of getting into the heartbeat of your business and how that heartbeat is delivering to the client. That being in tune with feedback and being prepared to adapt and evolve, I think, is probably as important as anything else.
So can we get into what a definition of professionalism looks like? People would look at the surgeon who does the operation, or the lawyer who gives them advice. You would ascribe they are professional, or they are a profession. How would we define professional within the context of, say, financial advice and financial services?
So if I had the answer to that, it would be in the code, and it's not. And I think if there was an answer to that, it would be on the internet or Wikipedia or whatever. So I think you can give answers to the question of what is the definition of professionalism at a number of levels. But I think the second you've got a definition, that scopes it down and scopes it inwards, rather than accepting that there are... this regime is more, and this goes a little bit to my slides earlier, this regime is more than about a rule book. This is trying to allow you to operate in the way that you know is best for your clients. And some of that can't be articulated in a set of process steps, and professionalism is adding that around the core of this regime. And that's why the legislation, the policymakers allow for the code. They're accepting that there's some things you can't do in laws and rules.
Cool. Is that something I can pick up on?
No, go for it.
Thank you. And I'm mindful, Angus, that you said that you can't reach perfectionism, so obviously this is not going to be a perfect answer to professionalism, but I think, to my mind, I think the right way, or at least one way to look at it, is that if you start with an idea as a financial advisor about the deep understanding of what clients expect of you and what clients care about and how you go about achieving that, I think that is a core step towards defining professionalism in this particular profession and sector. And it may be there's elements that are the same in different professions, but there will also be things that are unique and different to this sector, given the nature of the work that you do and also because of different customer expectations and needs. So I think sort of if you start from that proposition, you might be able to define professionalism in a different way.
Cool. I'm going to segue to Katrina, if I may. Katrina, you're representing the advice community. What's your read on this conduct culture conversation and the professionalism discussion?
I've actually got to disagree with some of the comments that have been made. Sorry, boys. But, conduct and culture is business related, and it's governance, and it sets a framework to operate within. I totally agree with that. And it's fundamentally important that it's driven from that level for conduct and culture. Professionalism is personal. It's what you do as an individual every day in the service that you deliver. So it's up to you as an individual to determine what your ethics are. It's you as an individual to determine how relevant you're going to be, how up-to-date you're going to be with the knowledge that you share. It's the sharing of that knowledge and making the right decisions for your clients every day. It comes from within. That's what professionalism is. What influences that professionalism is yourself, what you surround yourself with, who you surround yourself with, where you get your knowledge from. That's what makes you a professional. It's what you do yourself when people aren't looking every day, which counts. That's the professional.
I think it's the standards that you hold yourself accountable to within the framework. And I think, to your point, Katrina, I think that I would say the vast majority of people in this room would call themselves professionals. And I think, it's about having those minimum standards that you have within your business that you aspire to achieve and deliver in terms of the clients that you engage with. I think that's really, really important.
Yeah.
I would also like to think that if you moved from business to business, you were still your professional. As much as I understand the business influences the framework which you operate within, actually you transfer what you are as a professional wherever you are, regardless of who you're working for. You take it with you. It's who you are. You own it. That's what you're proud of. That's why you do what you do.
So I understand that, I'm sorry, Richard, but I do want to respond to this because this is central to understanding this regime, which applies not just to people, but to entities. So one of the things we as a Code Working Group have had to grapple with is how we evolve these concepts of professionalism, integrity, competence, which are intuitively very personal words. We associate them through the history of those words with people, how we evolve those into a regime that applies to an entity, because that's how they're used in the legislation. They are used in that broader context that no matter how the advice is being given, those words apply. So I agree strongly with these two takes on professionalism, coming from a place where it's all about how you behave the person. But having gone through the journey with the Code Working Group, I now understand that competence and professionalism and integrity, and there's some other words as well, but those are the main ones, can be demonstrated organisationally, can be demonstrated by technology. And we've gone through a bit of a loop about, well, first of all, should there be somebody in the business who's responsible for that? And we moved away from that. Or, is it something that you can only measure in terms of how it's done by a person? And I think we've landed in a place where we can recognise the elements of those things delivered by something other than a human being. And I'd encourage you when you engage with the code, but when you engage with this whole regime, is how to import those human-type characteristics to the operation of advice giving generally.
Sharon, I'm going to come to you in just a jiffy, but Angus, just you implied in your presentation, as you have done there, and I just want to explore this topic of competence, because one of the notions is the reason why surgeons are professional and lawyers are professional is because they have the intellectual grunt and they spend a lot of time learning and developing, not only up front at the start of their careers, they do induction years and mentoring years, and then a lot of ongoing professional development under the guide and supervision of someone who's more experienced. How did you think about that through your ruminations within the code, notwithstanding that you can't land anywhere? But interested in your thoughts on that.
So the first thing to recognise with competence, knowledge and skill is there are different types of competence, knowledge and skill. And it's, horses for courses, if you like. It's not just about having a high level of academic achievement. Some of the best financial advice is advice that helps decode the complexity of financial services for the consumer. And a lot of the competence there is not knowing how to analyse a spreadsheet, but it's about how to empathetically engage with the client and decode a situation for a client. So you can't just say, okay, you need to do a master's degree because a master's degree is going to deliver it. You've got to recognise that financial advice is quite a, dare I say it sounds like a contradiction to the breadth of the regime, it's quite a human discipline. And even technology and businesses that are delivering without using humans have to be humanistic in the way that they think about advice. So for us, competence, knowledge and skill, for the Code Working Group, it's not about the academic standard as much as, okay, you need a baseline, that's clear, because people need a baseline of understanding, and that's really what Level 5 is delivering. On top of that, you need some sort of incentive for people to make sure that they've got the ability to do what they're professing they do, and that's going to change for different situations, and that's why we're placing so much emphasis on continuing professional development. But lastly, it's that broader picture. It's allowing people to be who they are in advice, as long as they're thinking seriously about what it's delivering for their customer.
Awesome. That's great. Sharon, I'm going to just close this bit of the discussion with you because, as you can see, this is not a black and white discussion. We could just focus on this for the next hour. It's got layers and it's grey and it's complex and so on. And I guess the challenge in the room is, we all call ourselves professional, and what does that mean for us when we get out of bed every day? And this is about opening that debate. So Sharon, the question to you is, in opening this debate, at a policy level, what does great look like?
What does great financial,
What does great look like in terms of, we're now a professional sector, it's 2025, we've gone down this journey. At a policy level, you folks have put the policy in place, and now you're saying to the sector, go forth and figure it out. Yeah.
Yeah, great. So in 2025, I want New Zealanders to be actively seeking more financial advice. There's a problem right now. There's the problem we've heard from advisors in terms of the current regime is standing in the way of you giving good quality advice, but also from the perspective of consumers, they don't know where to go and they're not necessarily actively seeking that advice. The Minister said earlier in the video that 68% of New Zealanders have money worries. And if they could actually seek out advice, whether it's really simple advice or really complex advice, and if they are actually motivated to do that and know where to go, then we can all help reduce those money worries.
I'm just going to segue briefly, because there was a discussion we had in Wellington yesterday, because when you're in the professionalism conversation, and let's say you're a one-person operation, kind of managing all this stuff and then thinking about, oh, what does it mean to be professional, and do I have the systems and processes and so on and so forth. Does this current regime favour large over small? And how's the regime managing the reality that in the cities and in the regions there are different business models?
Yeah, so we've had a lot of discussion about how this works for different size firms. And I think I heard yesterday that 40% of advice businesses are one advisor businesses. So it's absolutely crucial that this advice is scalable and works for firms of all sizes. So in terms of the legislation, I mean, that's principles-based, which just basically means it sets some high-level duties which can be applied in a way that makes the most sense in your businesses. Where the rubber really hits the road in terms of the detail, there's the things like the fees and levies and the code of conduct and the licensing requirements. So all of us here are working to design those details in a way that kind of can be scalable and can make sense for different sizes of businesses. A good example is the FMA levies that we consulted on last month. So they are directly proportionate to the number of advisors or nominated representatives that you have. So if you're a small business, you'll be paying a very low levy compared to a large business. In terms of systems and processes, I think it's kind of makes sense that if you're a business with 2 financial advisors, you're not going to need anywhere near the kind of systems and processes that somebody's going to need in a larger firm where you're having to be aware of what 100 or 1,000 financial advisors are doing. So the system and process side of it is scalable too.
Fantastic.
Yeah, so just on that point as well, Sharon, from us at FMA, we've really challenged ourselves to, when we're thinking around our approach, what licensing looks like, what ongoing monitoring and supervision is going to look like, challenge ourselves to really think around small advice businesses and what that means. We don't want to have barriers in place that makes it difficult for small businesses to either continue in business or for new advisors to want to start as well. So we really, as I said, a lot of our education, a lot of our guides that we're currently working on that we will publish will focus quite heavily on smaller advice businesses. So they're actually encouraged and be able to understand what expectations are. Yesterday in Wellington, we also talked a little bit about why is it so difficult for new advisors to start in this business, because it's such a rewarding career for everyone. Wanting to be a financial advisor and what that means, the difference you make to people's lives. But as a career, it's just so rewarding. But it's one of the hardest professions to start in. It is the most difficult thing to put your shingle out as a new advisor and start to look for customers and clients. It's just really difficult. So we don't want to put any of those barriers in the way to make that any harder than what it already is.
I'm going to just grab that and run with it, but before I do, Lainey's over there, and I'm very happy to head to questions straight after this one. We've got a question in the front and a question in the back, Lainey. We'll come to you, gents, in just a moment. Nadine, future leaders. John's opened the door to that discussion. How do we grow the next generation of financial advisors?
Well, first of all, I do want to say I think we're already professionals in this sector. I think what the regime is actually designed to do is to actually elevate the awareness of this profession and the importance of elevating the awareness to the general public to actually seek advice and to seek out professional advice. So I think that's a really important piece to just call out. In terms of leadership of the future, and I guess a little bit to John's point, about getting new people into the sector, I have to say more recent times we've seen a lot more new people into the sector and a lot more women entering the sector, which I think is incredibly exciting because it demonstrates some really good green shoots that we're on the right track. For me, I just want to, I'm really passionate about making sure that we have really solid succession planning, and I think the role of the product providers and, Fidelity Life, for example, is to roll out support that actually enables that and actually clears the pathway, because it is hard when you start out as an advisor, particularly if you're, start out on your own right, if you're not part of or join another advisory firm. So it's important that we actually provide support to do that, like business development programs and the like. I also think it's really important that we attract talent into the product providers, because at the end of the day, we need to make sure we continue to have excellence in underwriting, excellence in claims capabilities, excellence in product design. We need to simplify. We need to get rid of our jargon. We need to do a whole lot of things moving into the future. And I think we need to start and continue some of the things that we're doing now. Leadership is actually a role of everybody. It's not the role of me as the CEO of Fidelity Life. Yes, I have a leadership role, but I think it's a leadership role for all of us in the sector. We have to lead from the front. We need to talk about the great things that we do for our clients and our customers. We need to really promote the value of the products that we provide and promote the value of the advice we provide. And I think this is where the education piece is really, really important, and we own that collectively. And I think regulation is an opportunity. It's an opportunity to elevate the conversation, and it's an opportunity to elevate the awareness for the general New Zealand public.
Awesome, thank you. Question?
Yeah, I've got a question for Angus, actually.
Sorry, can you just introduce yourself?
Brian Tucker. In the development of the code, you kind of indicated today, and we've seen in the various iterations, 2010, 2014, 2016, you indicated you're moving away from a prescriptive code to one that's far more principle-based. Doesn't that create a difficult situation for advisors to comply with a code that doesn't have some prescriptive measures by which you can measure? If we take the rugby example, the offside rule is not it's principle-based. Yes. You're either offside or you're not. Yeah. And by moving to a principle-based approach, doesn't that open us up to much greater risk that you might one day decide that in principle what that person did there was not appropriate in the circumstances, whereby with a prescriptive measure they might easily be able to prove that they did meet the code?
This is an excellent point. You mentioning rugby as the analogy, I was a terrible schoolboy rugby player, so I just sent shivers down my spine. So just a two-part answer to your question. Firstly, just observing that the scope of the code from the Financial Advisors Act regime to this regime has changed. So now we're in entity licensing, and there's more stuff in the legislation as well. So that's one step in slimming down what we do in the code. So there's some process-related stuff that will be dealt with, I assume, in licensing rather than in the code. So it's not that it goes away, it's just in a different part of the regime. But having said that, we've had a real tussle about how you get the balance right. Because yes, you do want to focus on principles so it's scalable to all sorts of different business environments. And that scalability isn't just in terms of size of business, it's in how, business model, how you want to do your business. You need the principle to be flexible enough for that. So on the one hand, there's that upwards push to get sort of more generic. But then on the other hand, there's this counterbalance of, well, how do you provide sufficient certainty so you don't drive compliance costs through the roof? And, I said yesterday in questions, we're probably, and it was probably dangerous yesterday to put a percentage on it, and I'm going to put a percentage on it again today, and it's also dangerous to do that, but I'll do it anyway. We're probably 70 or 80% of the way there, getting that balance right, and I think the only way we're going to evolve the code is to see how it works in practice, and there might be things that we have to come back in round 2 of the code to say, okay, well, there does need to be a bit more detail there, or perhaps there might be some situations where the principle could be better articulated. And it's rather like what I was saying about that iterative approach to good conduct. I think there's a degree of growth in the code itself. We think we've got a code where the balance is going to work well. We've done our best to try and achieve that, but we now need to pass that ball on to you all, and we need to see whether it does indeed work. But your point is absolutely spot on. It's a really difficult issue to grapple with.
Great first question. Thank you. Gent at the back.
Yes, good morning. Nigel Tate from Hamilton. Firstly, Richard, thanks very much for today. I think there's a lot of information that's out in the marketplace that we've heard today again. So I don't think there's much that's new, but what this has done is drawn it all together, draw strings together, which is good. I would like to, unsurprisingly, support the comment that was made by Katrina with regards to culture and conduct and with regards to professionalism. Firstly, to have conduct, you've got to have a good culture. So culture should be in place ahead of conduct. But both of those items can only be applied by the FAP in this particular situation. Professionalism is provided by the individual either employed or as part of that FAP. And professionalism and a profession is very clearly defined. We have PhDs in Australia that have done exactly that. I'm going to address my question to the right-hand side of the panel, if I may. And my question is around the fact that for 18 months or so now, I've been hearing about good customer outcomes. And it's good customer outcomes this, it's good customer outcomes that. I'd like somebody to actually define good customer outcome, because I haven't seen that in probably 20 years that I've been involved in the changing of regulation. So if that can be done at some stage, it'd be great, because otherwise you end up in a situation that Mr. Tucker here mentioned where a principle is based in the code, but as soon as there's a considered breach, it goes straight back to the prescription, what's expected. So it's assessed prescriptively.
Cool. Well, let's grab that and let's ask the panel. Thank you for the question. Good customer outcomes. Who'd like to have a crack?
Which side's right and which side's left?
I think you guys are the right.
Thank you.
Yeah.
It's Nigel, very good question. And it kind of, in some ways as well, kind of look at principles-based regulation, and a lot of that requires judgment, so personal judgment as well, as to what that means and how that's defined. But thinking around sort of good customer outcomes is the time that you spent identifying objectives, outcomes, knowing your customer really well. So it's putting yourself in a position to then sort of, think about it on the way that it says it's not doing what you can do, but it's doing what you should do, having understood what those objectives and where it is and what you're looking at. So in some stage, it's very much a one-to-one and quite a personal kind of interaction when it comes down to that as well. I think it's more difficult to try and define that if you wanted to write a guide down for a small business, whereas for a larger business, perhaps, you could start to think around, if I wanted to write a script for what that means, it might start to get a little bit kind of easier to do that. But even then, it's still behavioural, it's behaviour inclined. And it comes down to it. And it's a little bit like that culture thing as well, that's kind of around, it's shared assumptions. It's really hard to start to write those things down. But what you do know is when you get it wrong is where your misconduct starts to come in. And it's the misconduct piece that goes to either your customer complaints, the important time when it comes for a claim, or there's been something's crystallised and it kind of doesn't work, and then you can start to see that that's actually led to some quite poor sort of conduct outcomes.
Thank you, John. Oh, yeah, Sharon.
further speaking in defence of principles-based regulation. One of the criticisms of that's in the Australian Royal Commission report is that a lot of Australian law is very prescriptive. And I know they've got a section in the Corporations Act that says financial advisors have to act in the interests of their client, and acting in the interests of the client means following the 6-step process, full stop, done. And that kind of thing litters the Australian legislation, and it was really criticised in the Australian Royal Commission in terms of not putting the onus on people to actually think about what they're doing and think about the customer. New Zealand legislation, on the other hand, has never really taken that prescriptive route. So I think we're all probably quite used to thinking about the customer and how we're going to deliver advice to meet their needs here.
Great stuff. Katrina.
Yeah, thanks for that, Nigel. I've got a really simple answer to you, actually. It's meeting the needs of your client. It's actually that simple. So it's all about evidence in this new regime. So how do you evidence that you've met the needs of your client for, good client outcomes? So how do you evidence that? Regular communications with them, maybe survey them, and when they do make a claim or when they do need to redo their mortgage or seek more financial planning, you ask them, did what I give you last time work for you? Did it meet your needs? And evidence that it's meeting their needs. It's really quite simple in my mind. It's meeting the needs of the client, isn't it?
And I think I'm going to move on from that. I think that was a good rhetorical question and definitely one for afterwards. But the evidence piece is right. I think Katrina's on point. It's actually not up to, in many ways, actually not up to the right-hand part of the stage to define what good customer outcomes is. I think it's actually up to us as the sector to determine what that is, and that's evidence. And imagine if we could get research out of every practice in this room, aggregated up to talk about the benefits and quantify it and price it. And that's certainly a piece of work on the radar screen within the FSC Research Committee, and it'd be something that we'd be delighted to talk to Katrina about. Mark, I'm going to hold you just for a moment because Sharon opened the door to a conversation on what's happening internationally. And I think that's a really relevant discussion. We have some international guests in the room who are currently living under a very different regime and a very different process. Katrina, you shared with us a story yesterday. Do you want to maybe just share with us the contrast you've seen between the new regime coming in here via what you've seen and heard overseas?
Wow, Australia wouldn't want to be giving financial advice over there now. That's all I can say. It is very noisy. There's a huge amount of change. There's a huge amount of uncertainty. The politicians are running wild over there, changing their mind every other day, as we heard beginning of the week. Both opposition and government, because you've got to look at both sides, because obviously they're going to change in May, like they change every 30 seconds over there. Both have come out and said that trail is going to stay in Australia after all the noise that came out 6 weeks ago that it was going to go and they were going to go to fee zoning and commission was going to go and everything else. It's really settled down, the dust has settled down over there and it's starting to clear as to what it's looking like. I went over there a couple of weeks ago to talk to other associations over there and other advisors to get a real feel for what was happening. So I had a 360 picture of how it could influence New Zealand and what was happening in New Zealand as well. And I was talking to a financial advisor over there and she's got 4 people that work for her. She does financial planning. At the moment she pays $2,500 in costs for all her regulations. Next year that goes up to $55,000 for her business. So that's a massive impact on a 4-man business. Not only that, she was saying that because the education requirements are changing over there, to give regulated financial advice, you need to have a degree in 4 years' time. She was saying she's got 4 people in her team. 2 of them have got degrees, 2 haven't. The 2 that haven't got degrees, they're going to need to do they have got degrees. They need to do between 3 and 7 papers each to meet the requirements of the new legislation to be able to give regulated financial advice. Her other 2 staff she's going to have to put through 4-year degrees. So not only has she got incredible cost increases, but also her staff are going to have to take time out of their jobs full-time to go and upskill and get degrees so they can give regulated financial advice. It's really going to change the sector over there. There's predictions that they may have up to a 30% loss in financial advisors in 3 years' time over there. So it's going to have a massive change to the sector. When you talk to the sector about that, what they're saying is that You know, those that manage to stay in, that do have those which are qualified, will do really well, but there's going to be a massive gap between those coming through with the qualifications. So where are people going to seek financial advice if there are no financial advisors? How is that gap going to be filled is really the question.
Thanks, Katrina. I'll just broaden out the question because obviously at a regulatory level and a government level there's a lot of connectivity. Perhaps a question, John, to you and Derek around in the work that you folks do, and Sharon, to you as well, in the creation of FizLab. How much global lens did you go through before you landed on the right solution for New Zealand? And Sharon, I might start with you on that if I can.
So in terms of the development of the financial advice regulation, yes, we looked all around the world, including Australia. We always look, in any piece of policy, we look around the world, but we tend not to just try to pick something up and plonk it down here. We've got a different environment here. Things like having 40% of our businesses being single operator businesses means you can't just pick up something that works in the UK and assume that it will work here. Similarly with the Royal Commission, yes, we're looking at the findings and the things that are concerning over there and thinking about how to address them here, but we're not assuming that the same solutions necessarily apply here. So we'll put out some options for consultation, but we never assume that the same solution will work.
Yeah, it's been interesting because, you know, right across the globe at the moment, even if it's conduct or culture, but particularly in financial advice, we know and heard a lot of stories around what's happening in Australia. Canada is doing the same thing as well and reviewing, you know, financial advice. Singapore, UK, it's kind of coming from everywhere sort of right now. And some of the common themes through that kind of centre around licensing, so licensing of individuals and, you know, operating to kind of minimum standards at a licensing level. The other thing that I felt was quite important is what they're doing in disclosure, particularly in the area, not just disclosing facts and figures, but particularly Canada has looked at this and the requirement for advisors to actually ensure that their customers understand the advice that's been given. So to drive that through to the conclusion, so if the customer follows that advice, then what the likely outcome has been. And I think that's really quite an important thing to think about sort of through there, and it kind of brings to life how disclosure should really work. The other thing around, you kind of look around the world a bit, and after GFC, and we saw all sorts of really bad conduct and bad behaviour from firms all over the world. And what did regulators do across the world was that they have a truckload of new regulation kind of coming in, one after the other, but you still find, and you see the reports out of Australia, misconduct has still occurred, even with a truckload of new regulation that's kind of sitting over things. So whilst regulation is a good bedrock and it's really important, it's not the only thing. So when you really do need to have a look at this culture and conduct aspects that sit over that. And that actually is what makes regulation actually work. And that's where the benefit, I think, for customers come from. And I think we've learned a lot of that just from keeping our eye on that sort of world horizon.
Awesome, great conversation. I'm going to go to Mark Bonicevic, but just in terms of introduction, this actually is his baby. He chairs the FSC's Advisor Transition Working Group. He knocked on the table, banged on the door and said, we ought to do this stuff. So Mark, this is your show, and you have a question.
I do indeed. Thanks, Richard. Before I start, I look around the room and see there's a large number of, a huge cross-section of our industry, from financial advisors to lawyers to a whole bunch of regulators here, education providers, consultants for compliance and so forth. So can you please raise your hand nice and high if you are a financial advisor, so the panel can have a look and see two of you. I'm sure we got more. Right, thank you, nice and high, so we can get a feel for what portion of the room are financial advisors to see whether this message is getting across. Cool, thank you very much. My question is really for Katrina, probably a little bit for Richard, based on the work that we're doing, and a little for Nadine. What's going on in the industry to help financial advisors prepare for this regime change? Katrina, can I maybe start with you?
Thanks,
Great,
Mark.
sorry, Richard. Thanks for the question. We're doing lots at Financial Advice New Zealand. We're running webinars. We've just running our third one on getting ready for the regime. We've got licensing booklets, getting ready for licensing. We released our first one 2 weeks ago. So we do know that under the new regime, every financial advisor has duties. So we've aligned our workbooks with the duties. So as you go through each workbook, you'll ensure that you are aligned with the duties to ensure that you're compliant with the new legislation. We're running regional meetings around New Zealand as well through our regions, and some of them we've had 2 already where we've rolled out our first workbook where you can access that and understand how to use the workbook and how to get ready for licensing. And we're running through the other regions as well. Then on top of that, we're running other webinars on a regular basis as well. And also you can ring in any time to our office. Andrew Gunn, who's our learning and development, is across all of this, totally understands it. If you've got any questions, don't hesitate to call our office. We're like a help desk really for you guys.
That's awesome. I'm going to go to Nadine.
Great. So I think the sector itself is doing a lot in this space, actually. Our goal from a Fidelity Life perspective is we want to see a thriving advice sector. And seeing a thriving advice sector means that we're focused on how do we work alongside you to build a sustainable business of the future, one that actually complies, but also one that actually thrives in terms of good customer outcomes. So we've got a range of activities already in flight. We're about to launch a new business development program. We've been running individualised programs too, in terms of helping advisors particularly set up their businesses if they believe they need to change in whatever way. And I think it's also being relevant to the smaller businesses as well as the larger businesses. And I think that's one of the opportunities I think we all have, is to make sure that we're actually adapting the services and offers that we're providing so that everyone can actually access them in a way that is meaningful to their specific business. I also think too that, obviously from a Fidelity perspective, we're really committed to independent financial advice, but I think it's actually a holistic sector approach in the sense of the things that we're offering to support you as we move through this regime. And most advisors are actually well placed, good process. They understand what a good customer outcome looks like for their business and their own professional standards. So I think it's about how do we support and elevate that.
And I think that's the message, right? We actually all own our sector, and I think the more the sector does, and today is just an example of it, there are people in the expo that are all there to help. Now, of course, everyone has got their particular area of expertise to help, and as Nadine said earlier, the commercial world lives and breathes, and as it should. But I think we all have a vested interest to make sure that the sector transitions effectively and actually gets positioned for growth, and I think we all have a part to play. We have a question, here it is, the gentleman.
Yes, good morning. Tom Fox from Canopy Group. We're an Auckland-based advisor firm. What we've been talking today really is about making sure that the fence at the top of the cliff is well shored up and properly managed in our businesses, and we certainly subscribe to that. However, when you're running a business, you're always conscious of keeping your tail covered and managing your liability. And it's occurred to me that when I look at the current regime, each individual advisor has to manage his own liability, and in a QFE setting, the sales reps are managed and their liability is managed by the QFE. Now, with the advent of the FAP regime, what's going to happen here? We're 9 advisors in our outfit, and we keep thinking perhaps we should each be a FAP and an advisor. And I'm looking at potentially being a director on the FAP. But I keep saying to myself, well, why would I do that? Because I could be putting my tail right in the flame here. And what I really want to understand is, where does liability really lie? Now, I understand all the compliance regime stuff if you're in a FAP and you've got to do all that stuff. I understand that. But where does it really, this is really where rubber meets the road in terms of how we look to manage how we're going to organise ourselves going forward. So I'd be very interested in the panel's views on that matter.
Awesome. Thanks for that question.
I'll start with just kind of answering the licence question itself. So in your case, the most straightforward way for your firm to become licensed is for your firm to become the financial advice provider, and that makes the application to have a licence. Individual advisors within your business, which I presume today they may be a mix of AFAs and RFAs, for each of those advisors to become, or each of those to become financial advisors in the world tomorrow, and then have a look, and then individually, so independently, look to the code and have a look at the gap analysis you might need to do today as far as your competency is concerned. And then you have the 2-year transition period, so if any of advisors do have gaps, they can spend that period to get up to the new competency levels. That is the most straightforward way for your business to become licensed.
Richard, can I just add to that? I think you've got to determine what the risk is that you want to carry as a licence holder. I think that what everybody has to do is, what risk do I want to carry? Do I have the confidence in my processes and controls if I carry that risk? And everybody's got to determine that themselves. And obviously there is risk if you are the licence holder. That can't be contracted or away. It is your risk. So that's what you ultimately have to determine.
Thanks for that. Folks, we're in the home straight. It's going to be the last question set. I'm just going to tease out. And it really is the reason why we're all here, which is serving New Zealand consumers. And the question is, Angus, I might start with you if you want to have a go at this, or whoever wants to pick up the mantle. From a consumer point of view, is the fact that our sector only has a traction rate of, say, the 1 in 5s because that's the only market, or is it because we failed to manage the message and actually showcase the things that we do in a way that tech companies have done brilliantly? Interested in your views on that.
I'm not sure that I fully understand the question, and actually part of the reason I don't fully understand the question is I'm still thinking about Tom's question. And Tom, can I say, I think you should speak to Sharon afterwards as well to get a further answer. But on to this question, I think in a legislative sense, this regime is broadening the reach of advice. But I think also, just listening to us answering questions earlier today, when we talk about leadership of the space, we tend to come back to me and my client. It's that sort of, it's quite a narrow view, and of course that's completely reasonable and completely understandable. But I think within financial services generally and advice generally, we need to start to think more broadly, and we need to start thinking about that whole financial services ecosystem. And are we serving people who come to financial services in the best way? Or is there something better for them, something more wide-reaching for them that starts to get to answer the question you've asked me is, where are things missing? So it's almost rethinking the audience. Yes, it's important that I think about my client, the individual client. Actually, in the code we did something, it's a nuance in the code, but for a couple of the standards we talk about clients in the plural. And for a couple of the other standards, we talk about clients in the singular. And in each case, the code standard applies to the client. But by using the plural in a couple of instances, we're trying to draw attention to it's more than just the relationship with the person sitting across the desk from you at a particular time. You need to think more broadly, and it's that broader thinking, not just of financial advice, but our role in financial services, that I think is going to lead us to the better answer.
Thanks, Angus. Nadine, I'm going to go to you. Are we missing the point, or do we have to reinvent ourselves? How do we get to more Kiwis?
Look, I think it's a number of things. I think, first of all, the spotlight on regulation is actually an opportunity in terms of a springboard, and a springboard in the sense of raising awareness across New Zealand and getting everyday Kiwis to start having a conversation about something they really don't like facing into. I think it is also about simplifying our language, introducing more plain English, because we do tend to talk in jargon, and in a way that most Kiwis don't understand. And I also think it's about simplifying the process. And that's simplifying the process from, advisors giving the advice and recommending a product to when it actually hits a product provider, and simplifying that process so that it's less daunting, it's less invasive, and we can actually get people covered faster. And I think that's where the role of technology plays an important part. I also think too, the Kiwi psyche is an interesting thing. It's the she'll be right, mate, and we hear that in almost every sector in New Zealand, and it doesn't have to be just financial services. And we have to somehow break into that psyche around, actually, it'll only be right if I've got a plan, and I've got a plan that actually makes sure that I've got a backstop financially if my income stops, or worse still, I actually lose my life. So, I think we need to actually spend a lot more time educating right at the grassroots level, and we can educate through technology, but I think we are in the business of people. We're in the business of face-to-face. We're in the business of relationship building, and I think we need to leverage that. And again, I go back to, it's a collective conversation. There's room for all of the product providers to thrive. There's room for all of the financial advisors to thrive, and the ones that are still coming through the ranks, and the ones that are in the consideration of entering the profession. And I think we need to collectively work together to raise the awareness across New Zealand on the importance of seeking out advice.
Awesome. I can close it there unless someone else wants to have a go.
I was going to have a quick go. I think I agree with everything that Nadine said. And the reality is, if you think about even disclosure, is helping consumers get the right information at the right time and in the right way. And it's the fact that I think, at least my take on it, is that consumers want to engage, but there's a barrier. And the barrier is the jargon, the barrier is that uncertainty of not knowing what I'm going to get, what I've asked for at the end of the process. And so I sort of, as a consumer, we step away because we're unsure and we don't have that confidence. So I actually think that all of the new legislation is a powerful new tool to enable much better, stronger engagement with consumers if we use it in that way.
So I'm going to close, and Katrina is going to close with her comment. And the closing piece is, it's now 2025. What's different? How good are things? Where are we at? Katrina.
I wanted to answer the last question because I thought it was the most exciting question of all.
Well, you can answer that.
So I'm going to answer the last question first. So I think it's really, really exciting, actually. I think this is the time, we've got an opportunity to be relevant, modern, vibrant, transparent, and I think all of this disclosure and regulation is really good, but actually we need to open up the pipeline, right, before they even get to you. So how do we get to them? How do we engage the consumers? How do we see the relevancy of what we do? How do we make it so we're easy to get to? What are we doing on social media? What are we doing in marketing? What are we doing online? What are we doing on Facebook? How are they engaging it? Are we even measuring it? That's the stuff that's exciting. That's the stuff that's going to get the different generations, the 20-year-olds, the 30-year-olds, to really engage with financial advice. I don't think we've done a lot of it, and obviously it hasn't been done very well in the past because it hasn't grown. The sector hasn't grown. So I think there's a huge opportunity to make a really big difference. Sorry, what was the other question?
No, that's good. That's perfect. Thank you, Katrina. Very exciting. Angus.
I think I've said all I need to say.
Thank you, Angus. Nadine, 2025, what's it looking like?
I think 2025 is we've grown, and we've grown the sector, and we've got more Kiwis covered, and we've grown the financial advice profession. To me, that's success.
Awesome. Sharon?
I think success is more New Zealanders actively looking for advice and getting that advice from their really simple questions, like what KiwiSaver fund should I be in, through to complicated investment planning.
John?
Yeah, for me, it's about confidence. So for you as advisors, being confident in who you are and what you do and the success of your businesses. Confidence for consumers to be able to get advice, and confidence for the infrastructure that it actually is stable.
And last word to you, Derek.
Excellent.
Excellent is great.
I think happy and confident consumers and confident and happy advisors, we have an increasing demand for advice, and we realise there's that realisation of the value of advice that's so critically important to New Zealanders. I look forward to 2025.
Brilliant. Folks, on behalf of all of us here, These folks, this is not their day job. This is only part of their day job. We're only halfway through this show, so can we just thank them for their insight? I'm going to close just a one second preview piece. So delighted today to launch what you can see on screen. There's been a call, and again, Mark has led the team on this, that, you know, where's the one place you can go to find out all this stuff? And so we're delighted to launch today. This is the one place you can go and find out all this stuff. There's lots of stuff on there. We'll send out the link post this event. But we have filmed today. We have filmed yesterday. We will turn all those highlights into stuff that you can access and you can download, you can tap into. But I think it's part of us collectively saying, how do we help the sector transition? Really important. Want to thank and acknowledge again our partners in the Expo. Awesome effort. Hope you got inundated today. And if you want more, let us know. We've got a big show coming up in September, which is a Towards Wellbeing conference, and that is also being well planned within the FSC conference committee. But equally, it'll be thought-provoking, it'll be stimulating, and it'll be on point.